Hey, how's it going? You don't have to choose between cash flow or capital growth. You can design a portfolio that delivers both and actually builds the life you want. Now, my name's Goro Gupta from Ethical Property Investments, and we're at Properties and Beers. Now, before we get started, very importantly, if it's your first time here, welcome. If it's your umpteenth time here, welcome back. And if you have been here, you know the deal. We always start talking with what sort of libation we're having. So today we're doing Plantation Rum 2005 Barbados edition. I know you guys probably can't see it because of the camera screen setup. Now, let me read a little bit more about this so I can tell you a little bit more. So, uh, the aging of this is 11 years in Barbados after it's been distilled, and then moving off to France for another 2 years. So it started life in 2005 and came down in 2018 into the bottle, and here it is in 2025. Guys, cheers. One of my absolute favorite rums. Um, Glad to share it with you. It's got vanilla notes through it without being overly sweet and does bite you back. I enjoy a rum that bites you back without being Bundaberg like, so to speak. So today's a special edition of Properties and Views. I know I usually do this on Fridays, but you know, a lot of people have said, "Hey Goro, can you do this on other days? We'd love to tune in." And if you're tuning in, drop me a line, say hi. I'm watching the comments on the comment screen here, and I really wanted to start tonight by talking about cash flow versus capital growth. Why choosing isn't really the move you should have, in my personal opinion. And the old school myth is like, there's a tired narrative floating around. You're either a cash flow investor or you're a capital growth investor. You've got to pick your lane. You know what? That's small thinking. That's yesterday's playbook. I believe you deserve a playbook that expands over time with your portfolio. You know, here's how it is. You need cash flow for freedom today and capital growth for wealth tomorrow. And it's not either or. It's kind of like the girl in that taco ad. I remember this old El Paso taco ad when we were growing up, and that was what was it? It was a soft tacos versus hard tacos. Why not both? Right? The old El Paso ad. And so, to me, the conversation around capital growth versus cash flow, I get this question all the time. That's why I'm doing a Facebook Live about it. Where I don't believe you should pick. You should be able to have both in your lives, even in a high interest rate environment. Now, cash flow may mean different things to both of you, to both different types of people. But I believe that you can decide, how much cash flow you want or how much capital growth you want. You don't actually have to pick. You can actually have a good balance of both. And yes, of course, if you go really hard on the cash flow, you may lose out on capital growth, and vice versa. You go too hard on capital growth, you might lose out on cash flow. And by the way, tonight, stay tuned to the end. I'm actually going to be talking about why I believe there's one particular part of Australia that's thoroughly, thoroughly undervalued, and we'll look at that. We'll look at that a little bit later today. So let's talk about cash flow. Here's the thing: cash flow is your life force. It's what buys you time back. It's what funds your choices in life. Cash flow is the freedom now. And it's being able to say yes to a plane ticket, being able to project what you're passionate about, being able to, be present with your family, say yes to being present with your family, being able to pick up your kids whenever you want. Without cash flow, you might be asset rich, but existence poor. And that's really important to know. You can't live, and I borrowed this statement from a friend of mine, Andrew Baxter. If you're watching, hello. Uh, he used to say this all the time. You can't go to walk out of your paper mansion into your paper Lamborghini and drive to your paper private jet to go to your paper holiday. You've got to actually have real funds. And that's why really important to have cash flow as part of not just your property strategy, but your overall life strategy, because your existence matters. We can't just be real with just pure assets alone, because assets won't make you feel rich, and that's really important. And by the way, before I go further, there's a quote I used to have with friends and family, is that you know cash flow will make you feel rich. and capital growth will make you wealthy beyond your means. And that's really what we espouse here, what we do at Ethical Property Investments. And before I get started, well, you guys, if you're here, once again, drop me a line, ask me any question about cash flow versus capital growth or anything else about the property markets. More than happy to chat about this, or even what drink I'm having. Right? Um, those that have just tuned in, there's a Plantation 2005 on my desk. So let's chat about capital growth and why that matters too. Because if you're only chasing cash flow, you're missing the bigger play. Capital growth is what scales your wealth. It's what builds a kind of equity that you can leverage into even more assets, more options, and really more impact at the end of the day, whatever that impact looks like to you. And here's the thing. I will chat about where I believe the highest capital growth is yet to be in Australia, and I'll definitely will drop you a line in regards to that later on. But I think you should design both for cash flow and capital growth, and there are certain vehicles you can do with that. Um, how do you design for it? Well, number one, you target high demand area where rental yields are strong, vacancies are low, and long term fundamentals are solid. Once again, there's one place in Melbourne, the fundamentals are solid and it's underpriced. There's one place in Australia. So, mix the short-term income plays, like, you might have your co-living or SDA properties with longer-term asset, growth assets. So, for example, a few clients have come to me recently, said, Goro, I've got a highly negative geared property portfolio. What can I do to turn that around? And we look at balancing it out, obviously not providing financial advice, but they've said, look, I want to balance out the portfolio. We've added in some SDA into that portfolio. And your portfolio needs to cover your needs today and raise your wealth to where you'd like to be in 10, 20, 30 years time, because you're not just building numbers on the spreadsheet, you're building a life. And I believe having a mix of both allows you to do good and make money, because that's profitable and principled. And I did promise you where I believe that growth is happening. And I think Melbourne is gearing up for a capital growth super cycle. And mark my words on this. We're seeing the early signs. Infrastructure projects booming, the highest growth over the last 2 to 3 months. Population is surging, rental demand is squeezing, vacancy rates are tightening. And here's the thing, right? We're seeing the people that had the mass exodus out of Melbourne, because I get this a lot. Oh, Cora, what about the people that moved out of Melbourne during COVID? See, that sort of thing was a few years ago. People are now moving back, and we're finding the interstate migration between Melbourne and the other cities has almost stopped, to a point where we are still at a rental shortage in Melbourne, and Melbourne land prices in the outer suburbs currently are at below Perth or Adelaide prices in the outer suburbs. In fact, for me to build the same property in Adelaide costs more than some of the properties in equivalent suburbs here in Melbourne. So it makes common sense. Why would Adelaide be priced higher than Melbourne? You know, you just ask yourself that question, and the answer should come through. We are underpriced here, I believe, by at least 30, if not higher percent. Um, I've been watching some content out there that shows that we're in the midst of a super cycle, so to speak, and we should see growth expand dramatically in Melbourne, because it's missed the growth politically because of what's going on politically over the last few years. But people are catching up. Politics can only take the situation so far. We've now got market forces, which is the general macroeconomics, taking over. So that's my personal belief about where growth's about to happen. And if you're designing for both, I believe you should look at a strategy which is basically in Melbourne, which is high demand for cash flow as well. Now, the other thing I want to point out is that I personally believe the outer suburbs, your suburbs like, Melton West, or your, uh, I don't know, Calcalo, or those sorts of areas are not likely to grow anywhere near as much as the suburbs, a few suburbs in. There's a lot of talk about Broadmeadows. I still don't like the demographics around Broadmeadows, each to their own. The numbers tell a good story. I think you'll still grow. I like Frankston as a story. And I like, those areas that are one or two suburbs in. Give me the Doreens of the world, the Deanside. Give me the, By the way, the reason why I don't like Melton, there's a lot of available land in the middle there between Melton and Melbourne. So Deanside's actually probably a better bet, in my personal opinion. Then we have areas like, for example, in the Geelong area, there's still a lot of places that are underpriced for what they are, because Geelong is its own beast, it's its own growth beast, and it's missed out on some growth that it's definitely overdue for, in my opinion, if you compare it to sort of the east coast of the peninsula versus the west coast. Uh, and you know, if you've got any questions about that, feel free to let me know. But I think we're seeing now. I did a webinar the other day. We talked about a particular type of property that can actually, after you pay your expenses in the current mortgage situation. By the way, as soon as mortgage rates drop, we're going to see some massive, massive growth here in Melbourne. Is my prediction. Mark my words. Put this on a timestamp and watch this video again. But here's where I feel what's going to happen is that. If we're going to see significant growth in Melbourne as soon as, 3 or 4 interest rate drops that happen this year. And if you're looking at areas like, what do you invest in? Co-living is a great way you can actually have capital growth and cash flow, because our particular model of co-living actually looks like and feels like a fairly regular house. So it gets valued by the banks as a regular house a lot of the time. So you get the growth that occurs with every single other property out there in that suburb. So you capture that growth, but you have cash flow that's 2 or 3 times higher than the market rent out there. So there's a way to do that. And if you want rent that's 2 to 3 times higher, along with your regular capital growth, this is one of the best ways to achieve it. Now, this only works a few suburbs in. You can't do it right smack bang into an existing suburb and have it do amazingly well, unless you're, less than 10 kilometers from the city. That's the other way co-living works. Now, the other thing you should look at is that you know I still believe Melbourne's next super cycle is starting. Are you positioned to take advantage of it or not? And I think, personally, you should look at taking advantage of these super cycles, because they don't come along that often, and we are underpriced here. And for me, that's all part of this financial freedom, because, freedom isn't just a dream, it's a decision. Cash flow and capital growth, you can have it both, and you should have it both if that's what your finances allow for. And it's something you should put on your bucket list, because it's something that I believe, my good friend Optimus Prime says. Where is he? He's around here somewhere. Freedom is the right of all sentient beings. My tagline is financial freedom is the right of all sentient beings. That's one reason why I love Transformers so much, because it has these powerful tools. Now, uh, you know, uh, now obviously there's not many questions. I'll keep riffing on. Now, one other thing, what we're doing for some clients is actually we figured out a way where we can get up to, you know 220 to $240,000 gross income from a particular property per annum. Now, after you pay down the mortgages and other expenses, pretty much you're left with over $120,000 net income. If you want to know more about how we can do that, of course, drop me a line in here, or, whatever, wherever you're watching, send me a PM. So here's some of my thoughts, just to close it off today. And that is, you know what? You don't have to play by the old rules. You don't have to choose between breathing and building. You can have cash flow, you can have capital growth, you can also build a portfolio that gives you freedom today and a legacy tomorrow. You know, for me, property is how we do good and make money. It's how we build differently. And that's why I run these properties and beers on a regular basis. So that's, you don't have to choose between cash flow and capital growth. You can flip the script and choose both. That is my honest opinion. And if you're watching the first time, my name is Goro Gupta. I run a company called Ethical Property Investments. We work with investors, helping them ethically invest in high cash flow properties all across Australia. Looking forward to catching up with you guys again, and I'll see you soon, and have an amazing weekend ahead.